Well, hello and welcome to the Frustration of Freedom podcast. I'm your host, Troy Eadie, together with
Warren Otter, the co-host.
The co-host for today. And so today, both Warren and I have brought together some really great minds for you today. So we're going to be discussing the topic about preparing for the upcoming second wave of E-COVID-19. So we're going to be exploring, well, what is E-COVID-19? And then what are some of the things that we should be looking out for? And then how do we actually prepare? So Warren, would you be able to expand a bit more on this for us?
Yeah, thanks very much, Troy, and thanks for the introduction, and thanks for joining us, everyone out there. We've been having a chat amongst the group here in the last couple of weeks, a little bit about what E-COVID is, and I've sort of worked out it's economic COVID-19 as opposed to the human infection type. And we've been really concerned about the upcoming cliff that's going to happen when the Panadol that the government's been giving everyone at the moment runs out in late September. And there's a range of offers that the government have put in front, or support mechanisms that the government has put in place that run out in late September. And I'll let the panellists talk to that to some extent as we go along. But just want to give people a heads up that, collectively we're really passionate and mindful about the SME sector, so that's up to $50 million revenue private companies. And I believe that there's a lot of people in this space that are sort of potentially enjoying the Panadol at the moment. It's eased their pain, but the real headache's in front of us still. And I think we need to just be aware of that. And hence, all four of us in this panel have been having a discussion about how we can go about that and how we can start to educate business owners going forward. So, without sort of trying to go too much into the detail, I just want to just touch base a little bit further before I throw over to our guest today. I put together a paper a couple of weeks ago, which we'll share after this for those who are interested, and it does talk about the cliff that's coming at the end of this period, because 80% of private businesses, according to the ATO and the government, went into this pandemic with their, we'll call it their backsides dragging along the ground in a little bit of probably not the best shape already. And on top of that, we've now got a huge drop in sales or revenue for a lot of companies, combined with some increased debt and some relief packages that are coming along the way just to keep you propped up. But the concern is that towards the end of this pandemic, there's going to be a big chunk of businesses that will probably stay anywhere between 15 and 30% plus down on pre-COVID revenue. And then there's a lot of things to discuss and be aware of how they're going to cope when you've got 15 to 30+% less revenue in September, October, November, and you don't have the government assistance to help you. So just that bit of a backdrop, and I'll jump back in during the conversation and add my two bobs worth. And I just wanted to raise the fact that I think private businesses really need to start thinking about what their strategies are going forward. The government assistance is underway. Now, what are their actual strategies, and how are they going to either take advantage of the situation, which sounds a bit negative, taking advantage of a bad situation, but people will be able to, or how can you avoid actually falling off the cliff? So before I sort of ramble on too much further.
And Warren, I might just add to that. I think I really like the analogy you used the other day, and it's around if COVID-19's out there, if you're quite healthy, the chances of you getting it and being okay is okay. And I think the metaphor applies for a business. If you come into this situation and the business is very healthy, you've got a higher chance of surviving. But if you do have some underlying illnesses, or if there's some cracks showing, then there's more of a chance that there's going to be some challenges throughout this. So before we jump into it, I just wanted to let everyone know that's on this podcast or webinar live, we do have a Q&A box. I do welcome you to load it up full of questions as everyone is answering questions from myself and Warren, because we will get around to all of them. So we're aiming for a 30 to 40 minute podcast to answer your questions, but we'll hang around and answer all of your questions before we leave.
No, thanks for that, Troy. Yeah, and it's going to be a very interesting session. So if I can just give Jamie the heads up to start with, he can start to unmute himself while I mute myself. For those who don't know, Jamie is I call him senior partner, but there's lots of different terms. What are you, National Business Development Director now at McPherson and Kelly Lawyers. They're up and down the East Coast. They're a very good size law firm, cover a lot of different branches, but mainly focus on business work. And there's a whole scope there, and Jamie will give a brief introduction to that. But Jamie is right across what's going on. After Jamie, we'll be talking to Tony Rule, who's the tax partner and senior partner at Tag Financial. And Tony's right across a lot of the SME sector, including tax structures, the government assistance, and just what business owners will be needing. But can I kick across to Jamie to give your view on this discussion and the thoughts that you've had on it?
Thank you, Warren. It's a bit of a worry when people like Tony get described as senior partners and they look a lot younger than me. Whatever I am at McPherson and Kelly, I've been there a long time, 33 years now. The firm's got nearly 300 people in it, Brisbane, Sydney, Melbourne and Dandenong, and always looked after this SME market. It's been really precious to us for a really long period of time. And this is one of those opportunities where we get to put a bit back in my mind. There's just what's happening at present is amazing. Tony and I will have practiced during the ridiculously high interest rates of the 80s, the recession we had to have of the early 90s, the GFC in 2008, a bit of a dip into early 2000s, but nothing like this. And for me, there is no better example of how weird this is than the tax office. As far as I'm concerned, the tax office has always been very vigilant in ensuring that this country has revenue. And that means taking taxes off us all. Their attitude to JobKeeper is just fundamentally different to that. They want people to get in it. They want to get funds out. And at the end, I'd love to tell a couple of stories about things that we've heard. I think it'll just be re-emphasising what Tony says about JobKeeper is my guess. But boy, what the tax office is doing in terms of trying to get money out the door is extraordinary. So that's the current environment we're living in. JobKeeper, landlords deferring rent, banks saying don't pay us at the moment, employees saying happy to receive less, land tax deferrals, payroll tax, don't worry about that for now, and actually here's some back that you paid last 6 months. Just extraordinary the amount of assistance that businesses are getting at the moment. But it's going to end. There is absolutely no doubt that all of that's going to end. And what Warren was talking about in terms of what's our revenue going to be at that point, and can we cope in that new environment? Yeah, it makes me shake my head. And when I talk to others about it, it genuinely worries me. I'll just give you a snippet of an example of it. The National Australia Bank started, as far as I'm concerned, with this proposition. We are happy to give you a 6-month debt-free, no repayment method. No worries at all. You can have that freeze and you don't have to pay us for 6 months, provided that in month 7 you pay it all back. They've moved since, but in the first couple of weeks, that was their way of helping us. Oh, Jesus, that's no help at all. Like, who the hell is going to be able to pay back all of what you haven't paid in the last 6 months in 1 month? It's just not going to happen. And although the NAB, Commonwealth, I think, have been probably the most generous in terms of coming up with processes and ideas, but they're all going to want to be paid back. And so we get out the other side of this and we've got a mountain we can't look over. Because not only do we have to meet our repayments as they were back in February, but we've got to meet our repayments plus a bit when we get to November and October. So that then says to me, okay, what are our options and when should we take them? The first option, I reckon, is we could just take all the cash. So all of the payments that are coming in now, grab as many of them as you possibly can, and then get to November and liquidate. Now, I say it slightly facetiously, but it actually is one of the options. Tank the whole thing when we get to October. Put your hand out for every payment that possibly comes. Now, I hope people aren't thinking that, and I'm not going to encourage people to do that. That's borderline phoenixing, and there's a whole heap of rules around that. But in this current situation, consider all options, is what I'm saying. That's one option. The other is, and I think this is a much more measured approach, Jesus, save as much cash as you possibly can as a result of all of these payments that are coming in, and use those payments to come out the other side in better shape. There's a whole host of, if we get these JobKeeper payments and we can, pay them off debt, geez, that would be a great option. I don't know how many businesses are going to be able to do that, but, use your cash and additional reduction in expenses to actually survive out the other end. Another issue is just to look to restructure. I think there's going to be massive opportunities for companies with strong balance sheets. And, we certainly saw this during the GFC. Businesses picked up their distribution network and helped out their distribution network, or even purchased some of their distribution networks when those businesses needed to sell. That turned out to be, for 2 or 3 clients, a really good strategy that they implemented during that period. The other one is, merging. Is there 3 of you in the business, and is one of you closer to retirement than the other 2? And is that something that you should actually bring forward so that, it's a vendor finance arrangement that was going to be cash up front, but now it's going to be on vendor terms over 3 or 5 years? I reckon those sort of options in terms of merging and changing the structure of the business are really relevant. Also, just looking for other businesses to merge with. In the new environment, if we're all 75% of our old turnover, if you multiply by 3, you've actually got 2 really good businesses. And, is that what you should be looking at in this environment? And the other one is just the likelihood that this is going to end up in some form of insolvency or administration. And this is the one that I just really want to pause on for a moment, because I think there are going to be massive opportunities, particularly in the safe harbour laws that they've brought out they brought them out before COVID, and then they've updated them for COVID. And those safe harbour laws are really a positive move by the government for small businesses to do some restructuring. And the old voluntary administration and DOCA processes are also great opportunities for small businesses to look at their current scenario and say, coming out the other end, what are we going to look at? What are we going to need? How can we reduce our liabilities and start afresh when we come out the other end?
Are you able to expand a little bit more, Jamie, on the safe harbour aspect?
Safe harbour is really just some rules that have frozen stat demands for a 6-month period. And they've said businesses that are in this current safe harbour that we're in, you're not going to be done for trading whilst insolvent during this period, provided that you act. And it's easier to act to get into one of those safe harbours now. Previously, you had to go into liquidation or administration. It's easier to get into those safe harbours in the current regime. But one of the things about those safe harbours, as they were before COVID too, was that no one could use them because it said that you had to have all of your tax paid up to date at the time you went into the safe harbour. And businesses invariably didn't get to an insolvency practitioner until they'd started missing those payments. Whereas in this environment, businesses have been strong. We've had 10 years of relative economic growth. So they have been up to date with their tax payments. And now they don't have to make tax payments, so they're still up to date. And then those doors are now open for them, whereas previously they weren't. So that's a good example of where the safe harbour has greater scope for businesses than what they previously did. I reckon the bigger issue, though, just at present, is whether you look at these restructuring options, and I'll use the DOCA as an example. So a deed of company arrangement where you go into an administration arrangement, someone else runs your business for a while, and you renegotiate with all of your creditors, all of your employees, your landlord, and your bank. Your bank's in a slightly different situation because they will be a secured creditor. But you renegotiate a new deal for the whole of your business when you come out of the deed of company arrangement, which is what I'm referring to as a DOCA. If you do that now, talking with our insolvency people, one of the fundamental people that used to turn DOCAs into liquidations was the tax office. And that was on the basis of, if you owed the tax office $350,000 and in a DOCA you made a compromise of $100,000, the tax office invariably voted no and voted against you on that. And why? Because they wanted to send a really clear message out to businesses that they couldn't do this to the tax office, go into a DOCA and not pay the tax office. And it was part of the tax office being big and tough and aggressive. Sure, they'd look at each DOCA on its merits, but it was very hard at times to convince the tax office to vote yes for DOCA where cents in the dollar were being paid. I'm not sure that we're in that environment anymore. And that conversation we were just having before about the tax office being generous currently, I think is a new world order. And so the chances of doing a DOCA now at 20, 25 cents in the dollar, and again, caution in relation to 20 or 25 cents. It depends upon your circumstances as to how a DOCA will be built up and look like. But I say with some confidence that it's much more likely that you could get DOCAs through at 25 cents than you could at 55 cents that you may have had to have offered before. And why? Because we are in a new environment. And because people like creditors, like the tax office, are being encouraged to continue and allow businesses to continue so that they can continue to employ people. Well, if that's what you need to get out the other end and continue employment and then build your business back up, boy, it's something that people should be looking at now, I think, not necessarily just waiting until October and then seeing the proverbial on the fan. I reckon there's a lot that people can be doing now. Have I got enough time, Warren and Troy, just to give a couple of examples?
So just before you do, I think it's worth mentioning. I think people have two paths, and I think a lot of people are potentially sitting in the grey area, and that is, you really either gear your entire mindset and the mindset of the entire business around growth and moving forward, and mergers, acquisitions, so like talking to Warren, or managing your cash flow, or implementing systems like so for Tony and myself. Or you then decide, look, this is way worse than I thought it would be. I'm definitely going to need a lot of help, and then it comes kind of down to the Jamie strategy. Would that be right?
No. I'm talking in my mind. I'm only talking about the grey area. Okay. Because I think you need to do those business systems improvements and marketing at one end, But at the same time, don't forget about what you can do in terms of dockers and insolvency and protection of your own personal assets. In my view, be doing both. And maybe the two examples that I give you sort of highlight how that can work.
Yeah.
So first of all, a business that came to us the other day, we were talking to them about how the JobKeeper door opens and closes in relation to aggregated turnover and GST turnover and the processes. And we said, we have found that the ATO is being unbelievably flexible, and you should definitely go back and talk to the ATO, even though it doesn't look like you fit in. You should really push that barrow a bit harder to see how you can get into JobKeeper. They went back to the ATO and the ATO said, how the hell can we help you get into JobKeeper? And then started talking to them about the three parts of their business. One part of their business, so they're all in health. One part of their business is absolutely going gangbusters, 120% of turnover. And as a result of that, the other two businesses, which have completely and utterly died, 10 or 15% of their turnover, those two parts of their businesses, that overall, they're not quite down 30% across the board. So they start talking to the ATO, and the ATO says, no, we think we can exclude that part of your business that's going really well. I'll get the supervisor to sign off on it, and I'll let you into JobKeeper in relation to these two parts of your business that are really suffering. So then they get some financial help in the tune of about 50 grand a month. That will be fundamental to them getting out the other end. When they get out the other end, one of the problems in those two businesses is no one's going to the doctor. The doctor doesn't then refer the patient to the specialist, and the specialist doesn't then say, you need this company to help you with the issue that you've got. Once people go to the doctor again, the specialists are going to get the referrals again, and they're going to get the work again. You know, they're absolutely confident. In fact, they think there's going to be a backlog. So when they get to October, they're going to have a backlog to deal with, and their business, they expect, will go really hard really quickly. Perfect example. They've just got to survive through this period. You know, sure, they'll manage their landlord and their bank, but the JobKeeper payment is going to be perfect for them, and they're going to come out the other side and they can see themselves bouncing back. Good scenario. Don't, and they should be exactly where you were saying they should be, Troy. What are you doing for your systems in place when those two businesses aren't that busy? How are you improving your processes and systems so that when you come out the other end, you're amazingly efficient at processing the work? And if you go to 120%, you may well be able to do it on the same resources, and then you make more profit. Great result. And so each spare minute, hour that your people have, work on your processes and systems and your marketing to grab that upturn when it comes. Perfect example. At the other end of the scale, sorry, Warren.
No, you're right. You talk the other story.
At the other end of the story, I just look at our clients in the travel industry and I go, whoa, when are they going to come back? How are they going to come back? Which parts of their business? Their international travel, or their domestic travel, or their boat cruises? or that maybe their canal cruises will kick on now because they're not as dangerous apparently as, they've got a multitude of problems. So they've got one bit of their business that might go okay, and they've got 10 bits that are just going to be worse than bad. So how the hell do they get through this period, even with all of the advantages they're getting? And then what do they do when they come out the other side? They've got a mountain they can't look over. So that's an example of where we would be saying to those businesses, look, seriously look at trying to cut the top off that mountain and turn that mountain into a hill that you can get over when you get out the other side. So that what do you think your revenue will be? What do you think your expenses will be? What do you think you might be able to repay to the bank? Now, doing a DOCA or an insolvency process now to help you deal with those liabilities that you're currently racking up, absolutely critical in my view. And that's the perfect example of you've got to do some major surgery in terms of your structure. And, you might merge with a business that, your domestic business, you've got a bit of domestic business, but another business that's got a really strong domestic business, and you think domestic's going to be really strong for 2 years. They haven't got much international, and you can see international coming back in 2 years. Look, can you help us through this next 2 years? And then after that, we'll both reap the rewards of having a really strong domestic and a really strong international, and we'll be able to repay some of these debts, but not all of the debts. So let's do something about the debts now, restructure, come out the other end in better and bigger shape. And at the same time, the point that you made is absolutely right, Troy. Whilst you've got time on your hands, what have you done about your processes and systems and marketing that you can squeeze every drip out of the lemon when you come out the other side? I think for businesses like that have really suffered and can't just flick on a switch at the end too, what can we do about those businesses? Yeah, I reckon we can do lots for those businesses. So look at both ends of the picture. Marketing, processes, systems, improvements, but at the same time, sizable restructures and trying to fix up, trying to come out of this without as much debt as what it's currently looking like. Most businesses are going to come.
Thanks for that, Jamie. Can I just jump in for a second? Thanks, Jamie. I might just in a second, really appreciate, we'll come back to you in a moment. I want to pass over to Tony in a moment, if that's okay, Troy. Just as part of a handover, I can't agree more with Jamie and what Troy was saying. The first thing is for people to really focus, in my view, is be aware what's going to happen at the end of September. Get some other people to critique what you're thinking about your sector and your industry, because so many people can be a bit too close to their own sector and have either an overly optimistic or an overly pessimistic view of what's going on. Get some alternative views as to where your sector's going and what the flow-on effects could be. But very much focus on getting things fixed now, but keeping your eye open to all the options. I think it's what I'm hearing Jamie say there. And just touching quickly before I hand over to Tony on the mergers, amalgamations, vendor finance, acquisitions, bringing companies together. I already know of some smart companies already right now who are already starting that process and already buying and bolting on other businesses that have got good forward order books or are going to expand their client offering in the future. And that's going to continue between now and right through this next 6 months or 7 months or 12 months. It's going to go beyond. So if you have got a keen eye for growth out of this, you can look at bolting on some businesses that are already putting the hand up and saying, look, it's my time to get out. But with that said, Tony, I'm really keen to hear your view on what Jamie's saying and how you're seeing things, and also your views around anything around safe harbour, but keep your eye on cash flow and so forth.
Yeah, absolutely. Thanks, Warren. Look, pretty much I agree with a lot of that's been spoken about. The observations I would make are that I think for businesses business owners through the month of April, it was almost a state of shock for a number of them. There was a lot for them to get their head around in relation to JobKeeper, this grant, this announcement, what is COVID, how's it affecting my customers, how's it affecting my suppliers, what's that doing to my business. So there was a lot for business owners to get their head around through the month of April. What I'm starting to see now is business owners are starting to take action. And the conversations I've been having with business owners is basically around, guys, you've got 4.5 months to get your act together, all right? We are heading towards a cliff and, when that JobKeeper finishes, okay, you need to be standing on your own 2 feet. Otherwise, we will be looking at, winding up or other options. So I think where business owners really need to start is, okay, how did you what was your position when you came into the coronavirus. Okay, were you strong? Were you healthy? Or, you know, as you alluded to before, Warren, was your ass hanging on the ground or dragging on the ground? And if that's the case, yeah, either of those two will, to some extent, determine what you need to do next. The other thing you need to do is have a look at, okay, what is this doing to my business? And we've got clients where I'm being told, look, my orders are stronger than ever through this, and that's great, and that's obviously not all of them, it's a small proportion. And I've got others at the other end of the spectrum in travel, in entertainment, in, you know, restaurants, those sorts of things. Obviously, the business is decimated, or to use proper terminology, in hibernation. So I think you've got to look at, okay, how were you positioned when you came into this, and what is the impact that's having on your business at this point in time? And then you've got to sit down and work out, okay, well, this is where I am. Okay, what actions am I going to take to protect myself and protect my business and protect my customers and protect my employees when we get to the end of September? Okay, you know, what will happen next, we don't know. There's a lot of talk, obviously, about a second spike in relation to you know, new cases. Now, if that's the case, we'll just slot straight back to where we were a few days ago in terms of almost complete lockdown. So I think for business owners, look at, you know, your cash position, understand that first and foremost. Look at your systems, so you know, looking at what is working for you and what has worked in the past, and what's not going to work for you in the future, and what will work for you in the future. So I think get that system side of things worked out. Look at, okay, well, what if we come back and revenue is only 75% of what it's been in the past? What does that, you know, what am I going to do about that? Am I going to find new product lines? Am I going to find new services? Am I going to open up new markets that are going to get me back to where I need to be? Or do I need to, you know, bolt on to another business? Or do I need to, you know, change the fundamental structure of my business? So there are, you know, and probably a little bit of cliche, but you've almost got to do a SWOT analysis. And I know we haven't talked about that for a while, but we've got to work out where we sit, all right? And from there, formulate a strategy. And my big concern and what I'm seeing, and I guess what you guys might be seeing too, is business owners are sort of saying, well, look, we're okay, the government's looking after us, we should be fine. And that just really worries me, because this, you know, as you were saying before, Jamie, the, you know, 30 plus years doing what I've been doing, I've never seen anything like this. I've never seen the tax office wanting to help us, right? And that scares me, because leopards don't change their spots, right? So at some point, they'll get back to where it used to be. But the fact that they are heading down that track, that's a scary thing. So, you know, look, I guess from where I sit, we've got 4 months to get things organised, to get ourselves organised. And look, if you're in that situation where business has been great, you need to understand, okay, why is that? I've got businesses in different industries who are sort of saying, okay, yeah, sales have never been stronger and orders have never been stronger. And that may well be, you know, if you look at the construction industry, people are trying to get their work done before a potential lockdown. They're trying to get everything done as quickly as they can. But what's your situation going to be in 12 months' time or 18 months' time? Will there be the number of new homes being built and the number of apartment buildings going up? Maybe, maybe not. But you've got to look at your own situation and try and work out what's happening there. So from a business owner's point of view, look, there are some basics. You need your fighting fund, but also too, tying in with what Jamie was saying before about the dockers, understand your asset protection situation. Understand where you sit in all of this. Okay, your business needs to be a tool that generates wealth for you and your family down the track. That's why we're in business, right? But if it also can bring you undone because you're not properly protected, then that's an issue as well. So Look, they would be my observations as to where we are right at this point in time. In relation to JobKeeper, look, it's early days. I know there's been talk about it may not run the full course, and then there's been talk about, no, they'll probably extend it at the other end. We don't know. Is there going to be a second spike? Is there going to be a third spike? How will businesses react through this 6-month period? I think there's a number of factors that need to be taken into account. Payments only started flowing through about a week ago, so it's really early days. So I wouldn't want to try and make a call on that. So I'm happy to take some questions, but that's where I sort of see things sitting at the moment.
Thanks for that, Tony. Really appreciate it. Tony just made a good point. If you've got some questions, I know there's a couple in the box at the moment, maybe start typing them up and bringing them through, because we'll raise them in a moment. There's a couple of comments there we'll probably touch on soon, Troy, if that's all right. A couple of things I just want to touch. Yeah, jump in.
Could I just make a couple of other comments following on from Tony's? I reckon one of the key things just at present is, who do you turn to for the help that you currently need? I reckon there's some, you made the point about external advisors. Looking at this problem just from your own desk, I reckon is probably dangerous in these circumstances. I reckon your accountants are just going to be absolutely fundamental. And, if your accountant's letting you down, then look at changing accountants, because I reckon it's fundamental to getting you through this period. I reckon lawyers probably come a bit later, after, I've seen some of the work that Warren's done, and, Warren and people like him, those consultants with a really strong accounting background, I think are going to be fundamental. I reckon you're going to have to pull in people with that marketing bent and process systems bent whilst you've got the time to do it. Now is the time to do it. So I reckon there's a really interesting analysis, because as we were saying before, this set of skills has not been required before. And so, or if it has, it's only been this bit or this bit or this bit. Just at present, it's all these sets of skills. So really think about what external advisors you're going to go through. I can say this with some objectivity. Lawyers aren't going to be the first people that you go to. It's after you determine your strategy that your external advisors are going to go, okay, how can you help us with this? And we'll be able to help in lots of ways, but it's after that first wave of analysis is done. So I reckon that set of external advisors. And the other point that I just wanted to make was the issue between going too hard and going too soft. So, let's wait and see what happens. Let's see whether in October we're in good shape or not. Let's see whether our revenues come back to 65% or 75% or 85% versus let's go hard early. Let's potentially look at doing a docker. Let's reduce our staff. Let's cut wages a bit further because we've only got 65% of our current turnover happening now. My strong view in relation to that is you've got 4 or 5 really key stakeholders. One is your employees, one is the bank, definitely your customers, but don't lose sight of, I think, the most important stakeholder, and that's your shareholders. And invariably in most cases, that means you. That means your house, that means your family. And so I would put that stakeholder back at the top for now. And don't get me wrong, you can't forget about your employees, you can't forget about the bank, you can't forget about your customers. They're all critically important, but this is a crisis, and I think it's likely to get worse from a financial point of view in October. And so you should be doing some real analysis about, if this does hit the fan, what does it mean for me and my family? or what opportunities are there and how can me and my family get out of this? And, honestly, that's just what I've been doing on a personal level in relation to McPherson and Kelly that's been going for 115 years. Do I think this is going to damage McPherson and Kelly? Yeah, but my assessment at this stage is it's only going to dent it. But have we stopped dividends to the shareholders? Absolutely we have. Have we cut employee salaries? Absolutely we have. And then when we come out, how is that tension between shareholders, customers, employees and the bank, going to quite work? And I reckon you're going to need a different set of external advisors to what you've just relied on previously. I hope your accountants can pull you through this, because there's a really important role for the accountants to play in this. And listening to Tony talk, he gets it. But there's also the Warren Otters and the consultants with a really strong accounting background that I think are going to be fundamentally important to putting these businesses through this tough time too.
Appreciate your comments there, Jamie, and I think it is correct just to think outside the square. And the issue about a lot of us have been amused over the years when you jump on a plane. They say every time you go to take off, they say when the oxygen masks come down, put on yourself first. And that's what Jamie was just saying then about as shareholders, put the oxygen mask on yourself first, then you can help your stakeholders around you. But if you're not looking after yourself first, it's pretty hard to have a level head to be able to help all the other stakeholders around you. So I think it is critical to do that. Before we open up to some of these questions, a couple of comments I wanted to make just on the back of what both Tony and Jamie have been talking about. We're just also, JobKeeper, whilst it's a fundamentally fantastic tool to extend a lifeline to employees and some opportunity for businesses to keep in touch with those employees and keep them at the other end, it's also, on the flip side, a really nice benefit it's offered, but it's still got a sting in the tail in end of September, is it's avoided at the moment businesses who have to pay JobKeeper, otherwise having to pay redundancies. And if you get to the end of September, and as Jamie and I have been talking about and Tony have been saying, if you're 20, 30% down, even 15% down, and you're a sizable enough firm and you can't carry the same number of staff, you are having to face paying redundancies at the end of a period when you possibly couldn't have even afforded to pay them at the start of the period. So just be aware of that as well. And that's where some strategic planning up front is critical. So the government assistance, I don't think is really going to be there really for people who have to pay redundancies at the other end. And we all want to try and help as many of our staff through the other end. And the other thing I'd probably just like to say before we go to some questions or some open discussion is hope and government assistance is not a strategy. I've always said,
I don't know, Warren. We've had someone tick hope in the survey we just released already.
Okay, because I've always jokingly said hope is not a strategy. Now people go, okay, hope's not a strategy, but the government assistance is a strategy, isn't it? But we all know it's got a fine line to it. So just this is not to shock or scare people. This is just to make business owners aware before it gets too far into the process. And we're trying to say before what Jamie was touching on, the earlier that businesses review it and look at all their options and start to get in a stronger position, the better they're going to be when they have to make some tough decisions. And let's hope they're not really tough decisions, because I think some people might find it difficult to make any tough decisions. And that's sometimes where it's important to get some other assistance by your side. Even putting one person off as a redundancy for a lot of business owners is an incredibly tough decision. But in the scheme of things at the moment, that might be a low-level tough decision that you have to make. So jump in, Tony.
Yeah, I was just going to say, Warren, just on that, I see this for many business owners as a call to action. Okay, and we're not going to enjoy what we're going to have to do, right? And if we've got to put team members off, we've got to put team members off. If we've got to cut a division, we've got to cut a division. If we're going to go out and acquire another business, I know that's fun, but it also comes with headaches as well, right? It's a call to action. We can't, we've gone beyond. This has gone way beyond us just hoping it's all going to work out and it'll be fine. And that's that's the nature of a lot of the conversations I've been having with clients is. your August or September or November last year may well be very different to what they will be this year. And whether you understand it or not, you're in control of that, and you've got to take action. So that's sort of how I'm seeing this period of time.
Yeah, I'm really, what I get from this, and the reason why I think I was particularly interested in having this as a topic on the podcast is because, when COVID-19 hit, it very much surprised us all and hit very fast. But then, you're starting the conversations, particularly with Warren, and talking about, well, the E-COVID-19 is going to hit, and it will hit around about September. So we now have that awareness, or I wanted to share that awareness to make sure everyone realizes that it's going to hit again, particularly if you've been hit hard during this time. So from our perspective, I'm very much, and even our firm, our team are very much future focused. So we like to, some people focus on what's happened, what's happening, and then or what's moving forward. And I think from my perspective, I see this as the time right now to, if you've ever done planning with your team or haven't done it before, now's the time. You can either unify everyone around the problems that are happening, or just let your team wonder when they're going to come back to, like, what's your stage 3 to get out of this mess? If, for example, we put a lot of pressure on the government to provide a path out. I think it's up to us now as business owners, as leaders, to provide the direction. What is our strategy? Which clients can we best help? What's a specific list of actions, items, or systems we can put in place? And how can the team unify around that to make it happen? And then, what is the plan to get back to normal? When are we going to start coming back into the office? What does that look like? Is it part of the team? Is it all of the team? What are the new cleaning standards? So I think there's a lot to consider, and I'm a big fan of, if it's not written, it's not said. And I think there's a lot of invisible expectations. I think communication has dropped significantly because we're not in the same vicinity. So I think to me, this is like what you said, Tony. It's a real call to action. For now's the best time ever to have that one pager that everyone's unified around and that everyone's working towards to move the business forward. And at least hope, Warren, at least the hope comes from proper planning, unification of the team, maybe even some excitement that, if executed correctly, it could be an amazing opportunity. Okay, so any other comments before we turn to some of the questions?
If it's all right, I might just jump into one of the comments in the question box, if that's all right, Troy, and then I'll throw some of the questions to the guys. We've got on one of the questions come through to us from an insolvency practitioner, which is interesting, and he was extending a comment on the back of what Jamie was talking about, safe harbour laws. And the comment is that the safe harbour laws have been around for, and this is, I'm abbreviating a little bit, been around for a couple of years now. What the government have done in this last, since late March, for 6 months, is extended the trading under insolvent exemption for directors. So they've got 6 months of exemption for trading insolvent, but he's saying other directors' duties remain, so directors can still breach 180 obligations while trading insolvent, which I wasn't aware of. It's a scary thought. So we won't go into those 180 today, and I won't ask for the details, but there's a thought. Whilst you've got some safety at the moment, there's still apparently 180 obligations that you have to cover off whilst you're trading insolvent. So there's a nice thought. This is a question to the panel. I'll throw it open to both. Probably start with Tony on this. What's your thoughts in regards to how the government might recover all the dollars it's spending propping up businesses? Will it be tax reform, GST to 12.5%? What's your thoughts?
Probably all of the above. Look, in some respects, we're having the big night out at the moment, and we're going to worry about what's on the credit card next month. So, look, who knows? Are we going to try and pay this back in 5 years, 10 years, 50 years? who's coming up for re-election and at what points in time. Look, everything's on the table. So, it would be foolish for us to try and speculate. One of the questions, GST to 12.5%, potentially, could even be 15, don't know. This is, as I think everybody has said, this is uncharted territory. This is roads untravelled. So, there will be plenty of discussion about this in the future, and it's going to take some courageous governing to put us back on track when the time comes. I think at the moment it's about trying to keep people employed. It's about trying to keep the wheels turning. Will there be a cost? Yeah, you betcha there'll be a cost. We'll see where it goes.
Thanks for that, Tony. Before you maybe jump into your comment, Jamie, I've just had a reply from the question on the 180. Bit of miscommunication in the typing. It's not 180 ways, it's section 180. So apparently there's still a number of ways, but it's section 180. So I'll get Jamie's views on everything.
I was just going to make one simple comment. Definitely contacts with the state government are much stronger than contacts with the federal government. But in discussions with probably two ministers and a local member, they've said the state government is looking at shutting down the budget in relation to trying to curb additional expenses, to try to manage their cash flow. I haven't seen any of that from the federal government yet. But ideas and possibilities of spends into the future, they're saying, Jesus, we've got no idea when we're going to be able to fund something in the future. We're going to potentially bring forward infrastructure projects that create jobs, but doing expensive things that are nice to haves, whether Tim Pallas is saying, no, we've already shut that box down. So that's just a philosophical thing. I've already seen that from the state. I haven't seen any hint of that from the feds at all. They're still handing it out at a fair rate of knots, and I don't think they're even thinking about how they get some of it back in the future. I'm sure someone is somewhere in some dark room, but that hasn't come out at all as far as I can see yet.
Thanks for that, Jamie. Just there's another comment in the question box, and it's more of a comment, and it's on the back of what Jamie was saying a little while ago. It's probably something I put in the paper, that if you're turning to your accountant, and I know Tony falls into that sort of group as a large bracket, just be mindful that most accountants these days don't do this specialised work. I mean, tag are in a space that they do give good advice, but I like to get people to reflect on what the big companies in Melbourne and Australia are doing. The big end of town are focusing on the Collins Street guys, the big four, the other big advisory firms, and they haven't really been at accounting firms as such for 20 plus years. So if your accountant is your local suburban guy with 2 or 3 partners or one partner and a few staff, they probably are not equipped to solve your problems here. So that's what one of the comments was before, just supporting Jamie's comment. And jump in, Tony.
Yeah, look, it's probably a bit of a sad indictment, but I agree with the comment. I think there are a number of good accountants, but also too, there's a number that spend a lot of the time looking over their shoulder at what has happened in the past. And yet, look, you need a bit of that to understand where you are right now. But for business owners, right at this point in time, it's where are you now, and what actions are you going to take moving forward? So I have to agree with that comment that, look, generally, sometimes accountants aren't the best at that sort of thing.
Yeah, Tony, I was talking to a client yesterday just on that, and he wasn't akin in accountants to this, but he said a lot of people actually are classified as rowers. They're rowing, looking back where they've come from, rather than looking where they should be going. So they should be out in the front of the boat in safe harbour times, looking ahead and looking for the solutions rather than being rowers. So
watching out for icebergs.
The icebergs, yeah. Sorry, Troy, jump in.
You're right. I think what I was going to say is that I think it's really important to have your team around you. It's great to have a great accountant, but it's better to have a great accountant, your business coach, your lawyer, your banker, all sit around the table or on a Zoom session. Like one of the things that I love to do and get our consultants to do is call that meeting specifically with the accountant, the bookkeeper, the lawyer, or the banker, or even insurance. Once you've got a really clear plan, I think it's great. It's great to have your team on board, but what if you had your advisors all pointing the same direction, all with, their parts to play to help execute on that? Even if you're thinking to yourself, well, you're probably only doing $1 million worth of turnover, you can still set up some type of, get a couple of minds on your solution to help you through this time. I think I just wanted to add that. I think it's really important.
One final one, if I can, Troy. There's a comment just come in before we get the panelists to wrap up their last comment before we close this down, if that's right. It's mindful of time. Is our insolvency practitioner who's online here throwing me some curly comments, is just saying his intel is that banks are starting to shift credit staff into the asset management teams to prepare to deal with the increased number of clients who default once interest payments start again. Expect the banks to move early in 2021 to start to claw back their dollars. Banks won't be the first movers pre-Christmas. They probably want to have a nice Christmas first. So there's some nice food for thought. And maybe on that note, just get a couple of quick comments from both Tony and Jamie before Troy wraps it up, if that's all right.
Yeah, no problems at all. Look, there's not too much new that I want to add. What we say to clients is, look, if we understand your strategy, we're half a chance to actually help you achieve it. And that's not just for accountants, that's for everybody. And that goes to your point, Troy, about getting the right people in the room and just making sure that everybody's on the same page. So that's probably the first thing. The second thing is, guys, we've got 4 months to get things to where they need to be, right? There's a false floor underneath us with this JobKeeper at the moment, and whatever changes we need to implement into our businesses, we've got 4 months and the clock is ticking. The first 1.5 months has gone really quick, and that's going to continue. So that, I think they're the key points from my point of view.
Jamie?
Yeah, look, my message is just thanks. We get up in the morning to help businesses, and I've learned a lot today listening to all of the comments and even the questions. I love learning stuff about what's going on in this environment, and yeah, thanks for giving me the opportunity to share my views. We're seeing it happening. We're living it currently. We've got thousands of clients, and boy, do we want to help every single one of them get through this in some way, shape or form. So, yeah, thanks for the opportunity, Troy. Thanks, Warren. And yeah, it's always valuable listening to what you've got to say, Tony. Thanks a lot.
Thank you. And same. Thank you very much, guys. Appreciate the opportunity.
Perfect. I'll let you wrap up, Troy, if that's right.
Will do. Yeah. So look, in my experience, sometimes our clients or potential clients, when they start with us, they're always like, "Oh, how long is it going to take to get results?" I think the interesting thing in business is that, typically in a quarter, you can have really good results. A month is probably not far enough. 3 months, you can definitely achieve some great runs. So if we've got 4 months, there's no reason why you can't adjust your strategy, implement a plan, and really execute and make sure you come out of this. There's enough time if people move quickly. We have created a COVID-19 impact study. So collectively, with our minds, we've put together just a small couple of questions for you to answer. So after this, you'll not only get the recording, we've got a lot of resources that we're sending out. A list of grants that are potentially available. We've got some business health checks. We've got a marketing health check. We've got the survey. So there's a bunch of really good tools that we've just been adding up since we've been getting a lot of guests on, and that'll all come out into your inbox. So thank you very much for today, gentlemen. And for everyone listening, thank you very much for coming. And I think it's about time that we all pull together, unify, create a great plan, and let's see if we can come out of this stronger than ever. And the podcast will be alive again, 12:30 next week. We'll see you then.